Make sure you go to meetkevin.com. Coupon code expires in 2 days. It will include lifetime access to the Meet Kevin Alpha report every morning. We will start charging for that at the end of February. So get in now before the price really goes up and more content comes out. Check it out at meetkevin.com. Any questions? Always email us at staff@meetkevin.com. But for now, we gotta talk DeepSeek. Well, what did we just hear from Microsoft, Meta, and Tesla? And why the heck is Microsoft down 5.4% in the after hours, whereas Tesla is up 4% in after hours, Nvidia down about 1.25%, and all these numbers obviously could shift and flip and flop all over the place, but a lot of people are wondering what's the news, what's going on, so let's get through it. So first of all, Microsoft missed slightly on cloud. Now they're blaming not having enough data servers available for them to satiate the Azure demand that there is, but some people are scratching their head going, wait a minute, how do y'all miss on intelligent cloud? Now, they only missed by about 1.35%. So it's not that big of a deal in terms of the miss, but I think the markets were a little bit more spooked because remember, we went into this expecting Microsoft and Meta to say something like, hey, we have no plans to spend or change our capital expenditures, but we will see what we can learn from DeepSeek and incorporate it into our efficiency models at the company, right? And guess what? Facebook, which is up 2% right now in after hours, said literally exactly this. It's almost like they listened to my video before earnings, here's what Meta's likely to say, and they copied it. Microsoft didn't listen to the video. Meta said, hey, right now, we still anticipate our CapEx to be between 50 and 65 billion. That's up from the 51 they previously projected. And they, quote, hope to implement DeepSeek advances at Meta. They see business opportunities from artificial intelligence coming next year in terms of being able to actually monetize artificial intelligence. But it's too soon for us to make any kind of changes to our capital expenditure guidance, just 2 days after the release of DeepSeek, essentially. So Meta sort of looked at this and was like, oh, yeah, like, we can't make any changes yet on our CapEx, but, oh, absolutely, we're going to end up we're going to be more efficient, we're going to learn what we can, and open source is the future. Yeah. Okay, cool. So that was Meta's take to DeepSeek. Well, what did Microsoft say? Microsoft, instead of saying this, came in and said, well, so we missed on cloud, and Kathy Wood, by the way, is complaining that Microsoft is seeing, growth decline, and so we can kind of explore that more deeply separately. But when it came to Satya Nadella speaking about DeepSeek, he says DeepSeek has some real innovations, and we actually see CapEx growth being lower this year than it was last year, and there are definitely significant efficiency gains to be had from artificial intelligence. Now, this is really interesting because you kind of have this duality here. And my take is markets are looking at Microsoft going, okay, y'all are high margin. Y'all obviously would be a beneficiary of more efficient AI, but only to the extent that you can actually grow on share. And I think they're getting beat up here a little bit unfairly, but I think they're getting beat up on missing that cloud growth. I think markets might be looking at Microsoft going, okay, well, if y'all are going to be more efficient, we want you to sell more, but you're not selling more, so we'll go somewhere else. But honestly, it's not just Microsoft getting beaten up after these earnings. It's Salesforce is down 3% after that Microsoft miss as well, possibly in sympathy, and they've been running quite a bit over the last few days. Meta's still holding on to its 2.2-ish%, but that's probably because Meta makes most of their money from advertising, and frankly, they're crushing it with advertising. I mean, look at Meta numbers, for example. The average price paid for an advertisement at Meta is up 14% year over year. That is phenomenal growth over at Meta. You've also got to remember that even though they missed on their guidance by 2.5%, their numbers across the entire world are frankly great. You look at ad revenue growth at 28% at the rest of the world, 48% operating margin. Their costs only up about 15%, while they're really exploding with not only advertising, but also the potential side of innovation. Mark Zuckerberg, for example, started by talking about the Ray-Ban's Meta glasses and how, hey, the market will tell them if this is something that billions of people are going to want to use or if it's going to be a slow slog or grind. So it seems like for some reason markets were really resonating with Meta here a little bit more. ServiceNow was another one of those software businesses that just disappointed with the subscription outlook not great, and the stock down about 8% in after hours after they had a miss on their guidance. So it seems like markets today are saying, look, that's cool. Y'all can be more efficient because of DeepSeek. Y'all are reiterating the innovations that are happening with the DeepSeek technology, but we need to see big dollars coming to the bottom line and growth. And if you're not going to grow, like Cathie Wood said regarding Microsoft, then maybe this isn't the place to be. And so I think that's kind of why you started seeing Microsoft trade down a bit. Not only that miss, but also that mention that we're going to focus more on short-lived assets, so basically focusing on more near-term spending. That could be like a marketing campaign, right? Like, oh, we'll market our business and we'll use that marketing expense this year and that's it. As opposed to like a longer-term asset, which would be like another data center. So they're kind of in this duality where they're like, on one hand, we're data and compute constrained, but on the other hand, things are getting more efficient and we don't want to keep building data centers because maybe we'll just sort of converge into that efficiency. Now, that's kind of a complicated idea right there. So I want to draw that one out. And I'm not saying that you can't understand it. I think the way that I'm conveying it is a little bit complicated, but I think it's actually really important for us to think about. So let's grab a page on the iPad here. And let's draw this out, this thesis. And then I want you to tell me what you think about this thesis. And let's see if we're on the same page on this puppy. All right, so, and then of course we'll do our Tesla earnings. So I think there's a chance with what Microsoft is doing is they're saying, look, we have spent a lot of money on artificial intelligence, right? So spending on AI infrastructure, let's call it this, right? That's spending on AI infrastructure. And then let's go ahead and draw a AI needs curve. So we'll do, we'll kind of draw this logarithmically. AI needs curve. Actually, it's kind of like logarithmically, and then it turns more, what is that, parabolic? Upside down parabola. So let me label this. And then I'll sort of put like, where we are now. I'll call this the now. It feels like, and I could be wrong about this, but it feels like this is what they're talking about. So spending on AI infrastructure is this. That's the now. And this right here is AI demand, right? So they're at a place where right now there's a shortage. This section right here is the shortage. But the problem is because AI is getting more efficient, they actually see in the future a collapse in the need for data centers that they have. And so if they stop building, let's say they stop building right here, eventually what this section right here is going to be is excess compute. And I think when we get into the Tesla earnings, you're going to see some of that as well, though Tesla didn't get punished as much because Tesla has the argument of, well, Optimus robots are going to need way more compute. So just stay tuned. And I'll talk about Tesla in just a moment. But to me, I think, like, I personally would consider taking a screenshot of this right here. I'm not saying that's because this is like beautiful art. It's because I really think if you're an investor, you want to look at this critically and you want to make an opinion about this. You want to say, do I agree with this? So again, the dotted line is where we are now. The orange vertical line is spending on AI infrastructure. And the reason it's not exponential is because there's a limit to how quickly you can get chips and machinery. Machinery just sort of grows linearly. It doesn't really grow exponentially, whereas demand can, right? Demand can grow overnight like we saw during the pandemic, but actually manufacturing stuff doesn't usually grow exponentially. It usually does this stair-stepping thing where it probably practically looks like this, and then the linear line is really just the average of it, right? But the point is, if AI demand is so explosive to where, yes, we're compute constrained, but then you have Microsoft saying, we actually don't need this much, like we're not going to invest that much anymore into CapEx, like we're going to slow our CapEx growth. I think that's because they actually see those efficiencies at some point, putting them in a place where they're going to have a substantial excess of supply of compute. Like think about this, like take this out, I don't know, 3 years when it's all built, okay? So you really need new demand sources for this stuff. Go out into this direction over here, and what you end up with is this entire section right here, all of this widening, this all becomes excess compute. What you need are more purposes to fulfill this excess compute. And so what's an example of excess compute that can actually push that red line up, or that sort of demand curve up? What can do that? Well, honestly, Optimus is something that can push this curve up. And so I think that's why Tesla is reacting a lot more positively in the after hours, at least right now. Stock's up over 3%. It was down as much as 5% when it first missed on its numbers. And we're going to talk Tesla here in just a moment. But really, when you listen closely to what Elon said, what was different this time was that they talked in their shareholder deck about how they have this 50,000 unit server cluster. In fact, I have a picture of it right here. Where is it? Right here. It's the Cortex 50,000 GPU training cluster. That was different. Something else that was different was them recognizing $600 million of revenue from Bitcoin as a mark to market, which also means if Bitcoin's going to go down in the future, they'll have to take the hit. But the fact that they took a $600 million bonus to their income, and they still missed earnings per share on an adjusted basis by 2 cents. They missed revenue by $1.5 billion. And their gross margin came in at 16.3% versus the estimate of 18.9%, with margin excluding regulatory credits at just 13.6%. These numbers were not good. But the thing that actually kept them going was that they have more compute, but not only do they have more compute, they have the purpose. And so that is the opposite of what Microsoft is feeling. Because again, compare this. Microsoft equals more compute, but miss on demand, right? And then at Tesla, what you actually have is more compute, more demand coming via Optimus. So this is a very different artificial intelligence story. They're not really reliant on an outside source for keeping their servers busy. And I think that's one of the reasons why Tesla got rewarded here, even in the face of crap margin. But then again, remember when I did my earnings preview, we talked about this with course members in the Alpha report. We talked about this in videos on the channel. I talked about this everywhere, okay? I think I was as clear as I could possibly be here, that the Tesla earnings today were never going to matter about the vehicle margins or vehicle deliveries. We already knew all this stuff was going to be crap. It was all going to be about the future. Optimus, when are we going to get it? Oh, okay, you guys are going to try to build a few thousand by the end of the year to have them functional in factories. And then you want to get to ideally 10,000 a month at some point in the future. Your first line will be 1,000 a month. Then the next line will be 10,000 a month. Then you'll be at 100,000 a month. That's awesome. That's really exciting. Okay, what else can you tell us? Oh, you're going to start doing cybercab tests in Austin, potentially in June, and you're probably going to release full self-driving unsupervised later this year in California and Texas, and then other parts of the United States this year. That's great. Hey, what about hardware, hardware 4? Oh, crap. Cars with hardware 3 are going to have to upgrade to hardware 4 to probably get unsupervised. Oh, no. And then to that, Elon's like, good thing a lot of people didn't buy the FSD package, because he's basically implying that they're going to provide that upgrade for free because, yeah, you're going to need a hardware upgrade. You're going to need a new computer upgrade to actually get to this level. So it'll be interesting because I've got 2 cars I think actually one of them might still be on hardware 2. But anyway, I've got 2 older ones, and then I've got the Cybertruck, which is on hardware 4. So we'll see, I guess. But anyway, they also still sort of tease this idea about the launch of a new, more affordable model, but nobody's asking questions about it, or they're purposefully dodging questions on it and not even having them ask those questions. They keep teasing it. They mention it in their prepared remarks. They mention it in their shareholder deck that, more affordable model should come in 2025. But they never talk about, is this going to be a whole new car? Is this going to be like a refreshed version of some existing product? Is this just going to be a low battery variant of something that we already have, like a lower, smaller battery Model 3? They also have an interesting slide where they kind of suggest they're not going to use the stainless steel ever again in future products. So maybe they kind of learned a poopy doopy lesson there. See right here, they say use in future vehicles, and they check mark steer by wire, adaptive air suspension, custom laminated glass, ether lube, 800 volt battery system, 48 volt architecture. That's how you don't get the 12 volt cigarette lighter anymore. It's actually kind of annoying if you have old cigarette lighter products. But look what's not going to be included. The stainless steel exoskeleton is not going to be used in future vehicles. So I thought that was kind of interesting because that sort of implies that they're not really planning on a future version of like a Cybertruck or a Cybervan, and instead it'll be more like the Robovan or whatever. They talked about coming out with Apple Watch support through their app. I guess I need to get that app update because I'd love to have the key on my watch instead of on my phone. That'd be really cool. Talked about how they're producing a 2,500 Cybertrucks worth of 4680s. And Mega Factory Shanghai was completed in Q4. That's all fantastic. Then we've got they've got the roof going on the Reno facility for the semi-trucks. They expect to manufacture semi-trucks in next year. Elon Musk, as usual, and almost, I mean, frankly, I predicted it on the live stream. You should go watch it just because it's a meme at this point. I'm like, well, Elon's going to get off playing Diablo or whatever he's playing, and then he's going to get on the radio or, his phone and be like, oh, what are we doing, guys? Oh, earnings call? Tesla is going to be the most valuable company in the world. And then today, he actually surprised me because he got on and he goes, Tesla is not only going to be the most valuable company in the world, but it's going to sound like Donald Trump, and it's probably going to be worth 5 times as much as the most valuable company in the world today. It's going to be huge. It's going to go ballistic. He had a lot of excitement at the beginning. Let's just say everybody's so used to hearing it at this point, it didn't move the stock at all. But that's okay because the stock really shouldn't move off that because it was kind of just like a pump. We really want to hear updates. And so, again, very, very optimistic. But he kind of goes through the usual, how useful an autonomous car is going to be in the future and blah, blah, blah. But really, they want to toe into doing FSD trials in June in Austin as an initial operated by Tesla. And hopefully they'll have a few thousand Optimus robots at the end of the year operating in their facility. And then next year we get into more volume production for Optimus and Cybercabs, probably where then they can expand the robotaxi service, so to speak. So internal only for now. They do think that they can get the Optimus cost down to $20,000 and cost of goods sold, which is actually pretty good given that their COGS right now in a car is about $34,000, $35,000. But their average selling prices have gone down. Their average selling prices are so low right now that they're at the lowest margin per vehicle right now that they have seen since 2018, and that's before the EV tax credits go away. So, some potential pain on the actual EV and the manufacturing side, but again, the market is rewarding the enthusiasm because yes, as AI becomes more efficient, it'll actually be a big boon to Tesla. So the DeepSeek model would be a huge boon to Tesla because really you're able to likely operate artificial intelligence at, frankly, a much more cost-effective level of energy or spend, essentially, to accomplish, hopefully, that 10x requirement that Optimus robots are going to need since they're going to be doing, as Elon says, so many more things than just what a car does. So anyway, that gives you a little bit of a DeepSeek impact on the Tesla earnings, currently up about 4.4%. Microsoft earnings currently down about 5.28%. and Meta earnings, currently up about 1.8%. There you have it. Check out meetkevin.com. Thank you so much for watching, and we'll see you in the next one.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.